Good evening once again, ladies and gentlemen. This is going to be a very interesting half an hour. And once the half an hour is over, I will tell you something about Hemant ji, which we were discussing off the record. Nevertheless, it was a very interesting conversation. So, the digital beast, ladies and gentlemen, rewiring the banking sector. Anybody who's been more than 4 decades in India rarely knows how banking was, and as all of us know, no matter which bank you are in, your bank is with you. It's with you 24 hours, it's with you 24/7, and it does those amazing things which we could never think of even 15 years ago. It's a dramatic change in the landscape, and let's try and find out where this landscape is going to be 10 years from now. We are joined on the panel by Mr. Nitin Chugh. He's the DMD and head of digital banking at our largest bank, the State Bank of India. Mr. Vishnu Dusad, he's the co-founder and MD at Nucleus Software, a company that I have personally tracked for about 25 years. 8 out of 10 NBFCs and 8 out of 10 private sector banks run their financial backend on Mr. Dusad's IP creation right here from India. More than 40 lakh crore rupees is resting on his shoulders. And of course, we have Mr. Hemant Jhajhria. He works with KPMG and he advises on everything and anything that goes into banking, and he, as he says, makes tons of money out of that. Now let's begin the conversation. Nitinji, with you first. SBI was supposed to be a moribund organization where, files would get lost. And this was, I'm talking about 20, 25 years ago. But here is a giant which has dramatically changed the landscape of the Indian banking sector. If you look at your profit, if you look at your top line, all of them are now in tip-top shape, including fall in NPAs, both G and N. Tell us, when you look at the digital landscape within the bank, what are the 4 or 5 things that you feel are most critical for the next 10 years?
Great, thank you for that question. I think what goes unnoticed is the change that keeps happening on a daily basis, and only when something large is either announced or is noticed is when you really think that, oh, this bank or this company has completely changed. But honestly, in SBI, I think we are changing every day, we are evolving every day. So it's been something that I think the bank really does very well. But coming to digital technologies, I think the theme really is that what is changing around us, because we don't manufacture technology as banks, and the manufacturers are sitting here. So we are practitioners, we are users of technology. There is some little work that we do in terms of customizing it to ourselves. So what we are seeing in terms of the broader themes, one, of course, we are seeing AI becoming mainstream. We are seeing now the third wave of AI, which is now very clearly establishing itself, which is the whole agentic AI. Just yesterday, Microsoft announced their new quantum chip. So it seems like that even quantum, which was expected to kind of start taking shape in about 10 years from now, that whole cycle might get shortened. We are still not very sure how the applications would be in banking, but it does appear to us very clearly that whatever we thought in terms of the technology cycle, which would have been, let's say, 5 years, is now probably about 1 year. So the technology obsolescence is also setting in very quickly, but at the same time, the mainstreaming of some of the new technologies is also happening very quickly. Now, when that happens, the ability for a bank like us to take it to our customers, to our larger ecosystem, to our partners, is also that much more well established. And I think to that extent, we have been preparing and changing ourselves and being able to very quickly work on these new interventions that come about and deploy them and make them available for our consumers, so that we can continue serving them better. At the same time, the consumer behavior is also shifting very quickly. What would change in maybe 10 years as a habit or a habit formation is now taking place in a much shorter cycle. Our attention spans are continuously dropping. The last I read about it was 1.4 seconds. Okay, that's the time you take for swipe from left to right on a phone. That is all that our attention span is getting reduced to. Now, if that is the case, then the relatability of whatever we do, even if we use the best of technologies, becomes more important than even personalization. I can personalize an interaction for you, but what if you can't relate to it? How do I find out what's in your mind that you will find it easy to relate to that? So I think we are now trying to get into this whole interdisciplinary approach of finding out more from what our data is telling us, what human behavior, customer behavior is telling us, bring all that onto a technology layer, and make sure that when we serve it to our customers, it is both effective, efficient, and it is relatable from a customer's point of view.
Okay. Mr. Dusad, over the last 3 decades or so, you've been at the forefront of changing the back end of the banking system and having it digitized. Branch A talks to branch B, branch A, bank A talks to bank B, mainly on account of the kind of financial technology that you've brought in. Tell us what is closest to your heart. How would you want to see this digital beast maybe 5 years, 3 years, 2 years from now that could possibly change the Indian economic landscape?
Thanks for a very meaningful question. We have been dreaming of making 365% rate of interest go away from India.
Where is this interest rate at 365% annually?
Annual. And in fact, it could go as high as 3,650%. We don't realize it.
10% a day.
10% a day. We don't realize it, but if you want to borrow 100 rupees or 1000 rupees, you'd get 900 rupees in the morning and you'll have to pay 1000 rupees in the evening. And that is common across the country. Mr. Khara is shaking his head.
So how will this change for the better?
Yeah, I think what Nitin has talked about, that those are the technologies that are going to help us hyper personalize, the lending. Today we are talking about 400 million of us doing digital payments. The moment we move towards a billion people doing digital payments, everything that we are visualizing for the top 100 million customers, we would be able to take them to the billion people. And I guess AI is going to help us in a very big way in doing the hyper personalization, agentic AI and so on, and the digital infrastructure that is getting created with literally improving by the day. These are the two aspects that are going to make this happen. And the moment that happens, I think the economic benefit for the economy is going to be absolutely immense. Just imagine, for a 100 rupee loan, if I have to pay 3,650 rupees at the end of the year. And that is happening. Today it is happening in 2025.
Okay, so let's hope this thing is a thing of the past, say maybe 5 years for now. Let's get Hemant ji into the conversation. Hemant, because of the background that you have in terms of consulting globally, and of course at KPMG, you get to see the entire global financial landscape. Now, when you look at the Indian landscape in the same mirror, in the banking space, what do you think is a lacuna? What have banks not been able to address, which maybe overseas companies in Wall Street or in US or anywhere else have done much better?
So I wouldn't say there is, I wouldn't make an extreme statement of saying that there are spaces where banks in India have not been able to address and overseas companies have had success. But I would put it slightly differently. We are in a different country. In a country like ours, we have to think about how banks can serve a billion plus population, in some of whom live in very remote areas, and how do we ensure that we have social priorities as well. I think banks have done a very good job of, public sector banks in particular have done a very, very good job of of enhancing that coverage. And with the success of things like UPI, what we have been able to do, I think it's a very good, it's a phenomenal success. But if I was to take areas where we probably can do better, from banks side, probably a lot more investment is required in technologies. And we have seen recent incidents of like, where portals have gotten frozen up and RBI has taken action, and it's like, we need to move much beyond that. Secondly, there is a global phenomena where fintechs are attacking banking value chain in a very interesting way. Look, banks have always made money, and across the value chain, banking is a regulated sector. Everywhere is licensed. You have to become a bank. 20 years back, you required significant amount of capital because you had to open X number of branches, hundreds of branches. You needed to set up the tech infrastructure. You needed to hire a lot of people. Those barriers are coming down, and not coming down for the entire bank, but there are parts of value chain that are being attacked with point solutions. And we had done some research, and if you take the banking value chain, if you split it between the front end part of the value chain, so like take the acquisition part and put the balance sheet part separately, then typically what banks made as average ROE, the ROE for the front end part is 18 to 20%. The ROE for the balance sheet supported where you require capital is 4 to 6%. So imagine, today on the front end acquisition part, 80% of broking is captured by fintechs in India. There is a good chunk of I think, somewhere around 30% or so, I have to look at the exact number of personal loans, credit cards that are also being acquired by, fintechs in partnerships with the banks. Almost 5 to 7% are coming from neobanks. Savings accounts are coming from neobanks in partnership with banks. Wealth management is another area where fintechs have made inroads, and this is like 5 years back. If you looked at a lot of those spaces were majority captured by banks. So if you see the shift out, extrapolate it 5 to 10 years down the line, you could probably see that a lot of acquisition part of the value chain being captured by these players. And those are fee-based commission. They will make a commission on it. They don't have to deploy capital against it. It's a largely technology-based business. What will be a lot of banks will be left with is manufacturing. And if you think of a situation like this, then you are left with a 4 to 6% ROE business. That questions the viability of business. Would you want to invest in a 4 to 6% return on equity business?
Let's get Mr. Chugh into the conversation because he's the largest banker in this space and probably is either the most impacted or perhaps sees the biggest business opportunity. To you, Nitin ji.
No, first of all, I don't think I completely agree with Hemant's point of view. The fact that fintechs or digital economy players, not just restricted to banking. If you look around, every single digital business has come and tried to set up adjacencies around the existing old traditional businesses, even though the traditional businesses have had their own roadmap to modernize. This argument 5 years ago would have been extremely valid because the banks hadn't modernized their tech architecture. Today there is no technology arbitrage. 5 years ago, you could have argued that fintechs have better technology, banks have legacy systems. Today, banks have legacy systems, but they've also modernized. Everybody's moved to microservices. The ability for a bank to respond to something like this is not very difficult anymore. So the tech arbitrage has gone away. Now, that's number one. Number two, most of the prevalence of the business that is being done by some of the fintech players, or to the extent of 30% that Hemant said, is predominantly unsecured. Right? And unsecured is usually the lowest hanging fruit. Right? We've seen those cycles in credit cards also, and the cycle that we are going through right now in the unsecured lending, and with all the measures taken by RBI and the banks also tightening their own lending policies, is a result of the excesses that we saw in unsecured lending by some of the players who were new to business. And technology alone cannot solve for the fact that you need good,
Maybe that
sensible...
was exuberance in lending.
Not exuberance. You have access to capital. You have a good technology platform which is easily downloadable. There is never a problem of demand. People want 100 rupee loans also, and people want 100,000 rupee loans also, and you are giving them enough without asking them too many questions. And those people in good times will pay back. In bad times, they will not pay back. And we did see it even during COVID, the same companies running up even as much as 25-30% NPS. So the models like these cannot be tested in one cycle. They have to go through multiple cycles to be able to say that yes, this is the most sustainable way of, let's say, bringing or democratizing lending, as we say. But at the same time, on the question of ROE, I think this debate is never ending whether banks will only be manufacturers. But look at it, what do banks manufacture? We don't manufacture anything at all. We lend to you by borrowing from him. So is there anything that we are manufacturing in between? We are just manufacturing an account for him.
Maybe credibility?
Yeah, so the credibility is not manufactured, it's earned. And it's earned along with trust over a long period of time. And that is hard to take away. So therefore, the ROE that we see today, if let's say a bank like SBI has gone up to even 20% ROE, that is because we have progressively invested in technology and we have progressively made ourselves more efficient, and we have been efficiently deploying our capital also.
Okay, this is a question that's bothered me a lot. We are the world's most populous nation. We are, as many people say, underbanked. Yet we have millions and millions of tons of financial data resting in, your technological platform, what Vishnu ji makes in terms of the back end, as also what Hemant has observed globally. Yet it does not reflect on your market capitalization. An app like Yono should have actually increased your market capitalization by 25%, because the bank moves into the phone. Why is the market not seeing this opportunity of cross-selling, of increased transactions, of ease of doing business? Why is it happening not only for you, but for every Indian bank?
Well, that's a very simple one to answer. If you look at any digital business across the world where the valuations have gone from here to here in a very short period of time, because most of these businesses are less than 10 years old. You take any example. All of them have come to a certain level and have very, very sharply corrected in a down cycle, or even without a very, very specific reason, right? In banks, whether it's a public sector bank or a private sector bank, the digital businesses are inherent. Digital for us is not something which is sitting outside. Yono for us, for example, is not something which is sitting outside the bank. It is our new way of doing our own business with our customers, right? So when you are modernizing and digitizing yourself, you are taking progressive steps which are not going to take you from here to here in a day's time. It is going to take you a few years, right? So the market cap, if you notice in case of SBI, has progressively gone up. But we've never seen a case where it has sharply corrected and said that, oh, Yono was overvalued to the extent of 50% of the bank's market cap. Ideally, it should be 25% only, or it should be 5% only, because it is inherent to the bank. And we haven't yet said that, oh, Yono is sitting outside the bank and therefore it should be valued separately, or any such debate of
Do you calculate the business that's generated by Yono on its own?
Not just calculate, we report it in our quarterly results and in our investor presentations.
Okay.
Yeah.
Mr. Dusad, when you speak to potential customers in the Indian lending space, how do you see their expectations, and how do you see their acceptance to this new digital landscape that is emerging? According to you, who will be the winners, and what will be their 4 or 5 points which will be crucial to their success?
I think our customers are very, very, very savvy, because the landscape is emerging in a manner that unless you do your best on the digital side, your ability to compete is going to be highly compromised. And given that they really expect the world from a technology partner like us, and that is what we provide, and it's using those tools they are able to bring in efficiency, expand their market segments, and meet demands of as many customer segments as possible.
Okay.
And of course, we talked about the bottom of the pyramid. They are also wanting to go there, but this is how the landscape is emerging. It is getting excessively competitive, and AI is something that everyone is now very keen to adopt. Whole lot of them have adopted them, have been trying for some time and have adopted, and they want to accelerate that. I guess quantum is likely to happen over maybe 5 years at the most.
Okay.
And it will be our challenge to leverage these technologies to make sure that our customers are able to benefit
Okay.
from them.
Hemant, one of the most talked about and visible success stories of the Indian banking as well as the tech universe has been this universal praise that UPI has got globally. When you see the tech stack of UPI, how do you think it stacks up globally with similar competitors, and where do you think UPI is headed over the next 2 years?
So look, UPI handles much larger number of transactions in terms of volume compared to a lot of other global players when you look at, from a payment perspective. It's stable, it works well, it has done its job, it does its job at the cost of almost 1/10 of what a Visa or MasterCard would do. So, and one of the biggest, all the analytics and all the numbers that they put is largely around to manage fraud and to reconcile payments. And I think across both UPI performs fairly well. So it's a very good example of the platform we have been able to create through our homegrown technology. I think the next stage is for UPI to be able to be accepted in a couple of countries. I think they're working through those. One of the key challenges we have is we are still part of the SWIFT global settlement system, and that's something that's very difficult to replace because multi countries have to sign up to that. So I think that's a great example. But from a tech perspective, I think we need to probably do a lot more in a bunch of different areas and replicate UPI success across a bunch of different areas, which is what we are trying to do through OCN and through the account aggregator system and a bunch of, I think all these will come together to sort of create that right ecosystem.
Nitin ji, you've been one of the biggest practical users of UPI on your platform. What has been your learning over the last 6 months or so? How is the system morphing? Are there any changes that you observe which might point to newer growth areas for banks such as you or maybe other banks as well?
The UPI, I think, is evolving by the month because the volumes just can't keep pace with the previous month itself.
I just calculated it. We do 19.44 crore transactions every hour.
We do 19.5 crore transactions a day in SBI. So, so
on UPI alone?
Just UPI, just UPI. So I think we are also learning, but what has really happened in the last 6 months, since you asked a specific time frame of 6 months, is that the same users are obviously using UPI a lot more. But what it has done to the banks is that it has created additional categories. So for example, if a bank was doing 100 transactions in a day, after UPI the bank is doing, let's say, 200 transactions a day. Those 100 have come about from UPI, and the 100 has also grown to, let's say, 150. So all in all, maybe the bank is doing 250 transactions a day, as an example. So UPI has certainly expanded the pie. Now when that has happened, the whole new category of being able to lend on the basis of transactions and the flows, that has emerged. And because the transaction velocity is so high and the values are sometimes not very clearly observable because of the smaller values, observable not from a data point of view, but you can't attribute too much quality to that, it is leading to a lot new creation of algorithms which will help us in making sense of that data a lot better, so that if at all you need to take a view in terms of underwriting on the basis of transaction flows, whether at the merchant side or on the consumer side, it is at least nuanced to the extent that you're making good use of that data. At the same time, I think the UPI's thrust to go international has also been established clearly. Just 2 days back, the Qatari Riyal interface was also announced by the Prime Minister when the Qatari Emir was visiting India. And like that, I think many of such bilaterals have also been announced, and some of them are already working.
Okay. Mr. Dusad, when you look at the UPI from the lending side, when do you think will there be a lending mechanism which will rival the UPI on the borrower side? For the moment, this is a transactional paradise that we see. We are able to transact seamlessly any number of times during the day. When do you think over the next whatever time frame that you have in mind, will this be replicated on the lending side?
I would say 3 to 5 years upper limit. Because as we are looking at the number of transactions on UPI continue to grow, through Sahamati we would be able to take consent for our transactions being given to let's say multiple bankers, multiple lenders, and then they would be able to offer rates which competitive rates, and that's when we would have done away with 365% kind of
I think at the moment we must be transacting something like 24 lakh crores on UPI on a monthly basis. Is there a ballpark number that we have in terms of digital lending across the entire banking system?
No, I don't think. Maybe Hemant will have some idea on the aggregated number, but most banks will usually report about 20 to 30% depending on the line of business.
Okay.
The unsecured is usually higher, about 60 to 90%. Cards usually is a lot higher, at least the acquisition side. Secured, depending on again the kind of product. Home loans would be a lot lesser, car loans would be somewhere in the middle. SME is the new category which is now gradually picking up in terms of more rapid digitization.
Okay. Hemant, when you speak to bank managements, what is their take on cyber security? On a daily basis, frontline newspapers are dominated by one scam or the other, pensioner being robbed of his money. Brokering is a space which has seen a lot of scams happening. Where do we stand in terms of cyber security globally as far as the banking sector is concerned?
I mean, look, banks are quite cognizant. At least the CEOs that I've spoken with, they are very cognizant and very aware of like cybersecurity risks. Lot of there have been specific SOCs that have been set up, and now it's like resilience operation control ROCs also are being set up. So those are definitely an emerging risk. Look, part of the challenges were also in the legacy, technology systems that a lot of banks were operating on, and subsequently, significant investments are being made on the technology side, and to make the transactions a lot more safer. This is a shared concern. It's across the banking industry, as well as, not just nationally, but also I would say internationally, and there are many efforts that have gone across the banking organizations as well. So I think it's a game. We figure out something, and then I think the big cyber syndicates, they figure out something, and then you have to run by one.
Well, it's a cat and mouse game.
Yeah, it's always a cat and mouse game, and you have to keep investing. You have to keep working through these, and it's the more we invest in technology, the better we become with this.
Okay. The final set of questions to you, Mr. Chugh. When do you think the digital business of a public sector bank, the new digital business of a public sector bank will exceed its legacy business?
It also depends on what the bank is. Like in SBI, which is 218 years old.
Yeah.
Mr. Khara used to call it 218 years young. But yeah, we have so many lines of businesses and so many other different things that we do across the franchise, that to believe that everything will become digital or digital will exceed all of that, I think is a bit of a hypothesis right now, which is not yet validated. So we are not in a hurry to do that. And I don't think it is even an aspiration that digital should overtake the traditional way of doing business and all lines of businesses. Yes, in some businesses it is very, very imminent, if it hasn't happened already, that these will be much more than the traditional lines, but maybe not in all.
Within SBI, where has it happened?
So it's already happened in the unsecured. And now we are seeing that happen, I mean, picking up in SME, we are seeing that pick up in, let's say, a lot of categories of top-up loans. Top-up loans actually are predominantly digital. They are not so much physical. Now we are seeing the new KCC category also emerging because there we've been able to digitize the whole workflow end to end, along with RBI Innovation Hub and what we did with the DFS. So those pilots are being run, and if that happens, it's a very significant jump from the way that whole business was done.
Okay. Mr. Dusad, final question to you. Will there come a time when somebody will approach Nucleus Software and say that I want to buy these 5 stacks off the shelf, start a digital lending business, and maybe 3 years from now have $1 billion in terms of valuation?
Oh, certainly. I think the component-wise demand has already started coming.
Okay.
And it's going to happen soon.
Okay.
Yeah.
Hemant, the final word to you. Is this an eventuality happening in India that a banking unicorn will emerge, which will be a digital lender and will be there in the next 3 years?
So I don't know about 3 years, but I think it's certainly going to happen. So, and I'll take this opportunity to also, answer some of the objections that my friend Nitin had raised. Look, I mean, I still feel from a technology perspective, something is going to happen. If you look at Meta, if you look at Google, Microsoft, what is their biggest area of interest outside of core technology, information-based business, database businesses that they have created? It's financial services. Every few years there is an attempt. Apple launched a card, Meta tried something on financial services, they wanted to also launch their own currency, and there have been failed attempts, but they need to be successful only once. Only once. The scale at which they operate and the speed at which they are able to scale up, they just need to be successful once, and they will dominate a whole bunch, whole lot of systems. Look at what happened to broking. We had majority of banks had securities companies, and they used to do a whole bunch of broking and all. Now look at what is happening with broking. By the way, lending and wealth management are 2 areas where banks make money. Most amount of money. And if you look at unsecured lending, forget unsecured lending, I think Nitin talked about secured lending. Please look up this company called Rocket Mortgage in US. It is not a bank, it was never a bank, it was it was initially a broker that became a technology company. They only have an app backed by a call center, and they are the largest lender in the world, secured lender. And they do it differently, from banks, and they keep capturing market share every year. And by the way, they sell their technology. So they have become such a large technology company that they sell their call center services. Their call center is highly analytics driven. They sell their call center services, the analytics behind call center, and the technology on the app technology. They have become separate companies. So so it's a different world being created. How I have not come across, I've worked with a bunch of banks, and look, me not coming across doesn't mean it doesn't exist. I've not come across a single sophisticated model that or banks have created that's based on transaction data. So there is large amount of transaction data that is sitting with the banks. I've not come across any sophisticated model any of the banks have created that uses transaction data at scale. I hope Nitin has created something.
We'll show that to you.
But until I have seen it, I have not come across.
No.
This is
We'll
a wonderful
we'll show
debate
that to you.
happening.
Many such models, not just one.
Please.
No, I just wanted to respond to the last point that I don't know about the other banks, but we can show you tons
That's
of
lovely. That's good to know.
on both the customer acquisition side, cross-sell, risk management, fraud detection, you name it, everything.
So here's to doubling of the SBI market capitalization over the next 1 year, and the man responsible would be Mr. Chugh. Thank you, ladies and gentlemen. Just as our northern neighbor says, may we live in interesting times. I am sure the banking technological landscape is one of those. Thank you so much for your time. I hope you enjoyed it as much as I did.